hello. We are starting a fresh new week. Welcome to everyone. It's going to be a great week just because we as traders, this is the beginning of the year, not not the first week, but the things are getting on. I hope you have the same ideas or energy that I'm talking about. How are you doing today? Welcome. Welcome to another show of ours. Uh, my name is Victor, for those who are new to this channel. And for those who are already familiar with us, don't forget to hit that like button. Everyone included, that is. Today, Jonathan will be joining us perhaps later. And if not, then I will be your host. But we have a great show for you today. We have a special guest coming on. As you can see in the title, if you are, and we have someone else. If you want to grow as a trader, you want to be. Hi, Alex. How are you doing?
Hey, what's going on? I thought you can't be
If
on
you
your
want to
own.
grow I was saying to the audience, if you want to grow as a trader, you want to be listening to people who can help you grow, people who can point out blind spots, good habits, things that make you a better person, and in extension of that, a better trader. Today we have a great guest coming on, which will help us exactly in that arena. How are you doing, Alex?
I'm doing absolutely fantastic, actually. The market has been a bit crazy. I think we spoke about it earlier. I was like, my crypto is. I don't know who else is in crypto here, but it's a tough day for altcoin holders. But other than
It
that,
is.
everything is good. Everything
It
is
is.
good.
I don't. My holdings have been getting slammed last couple of days, but then
Yeah.
again, I'm not trading them. They're for long term holding, so I'm not too. It's okay by me. Um, but yes, it's. I mean, if you're a trader or a short term, investor, like a quick in and out, uh, it's hard. Definitely
Yeah.
hard.
Yeah, definitely. And I know the person that's coming in today, I think the psychologist that's coming in today, she's going to
Yes.
really help with a lot of stuff that are really important in trading as well. So let me just turn the camera for a second. There you go. We've got people coming in and coming out. There you go. That's a little bit better. But what's everybody trading? Who's in positions? Who's looking at the market? What they're looking at? Has anybody got anything that we should look at before the stream actually starts with Diane? I think it's Diane, isn't it?
Yes, it's Deanna coming to join us and give us her, insights as a psychologist to traders. Right, it's a great opportunity for everyone to learn from psychologists who are, focused on other traders. So it's a great opportunity for everyone. I've been looking. Maybe people in the chat can give us some ideas what they are doing today, what they're looking at, so we can give our side of our views on the market. But the euro, perhaps we can do. Let me check
We'll
the calendar.
go through the charts.
Yep. I'm going to show my the calendar for high impact news. There is none. Today's the 13th of January, and the only let me show the screen. Of course, the only there isn't anything actually. It's Japanese bank holidays. There isn't any high impact news on the dollar or any major or any pair for that matter. So it's going to be supposedly based on the calendar a slower week or slower day, I should say. But let's look at the markets. I'm going to
I think there's a possibility for a long in euro, and the reason why I'll tell you, I'll
okay.
pull up my screen, and I'll just show what I would actually be looking for a long position.
Mm-hmm.
There you go. Give me 2 seconds, guys.
No problem. No problem. If you want to, I will. Let me take away the screen for, and let me show you guys what I think. And you can let us know, Alex, whenever you're ready.
There you go. I'm back. You do your thing,
Okay.
and I'll talk about it afterwards. That's fine.
Okay, no problem. What I see is that we've been talking about this on the very high, the higher time frame, right? The weekly. We have come into this entry order block on the weekly time frame, which is part of a quasi, right? This being the established downtrend. That would be the neckline. Either you take it from here or from the lower pivot point. Doesn't matter. The thing, the point is, it was broken and it's now retesting it. The first time we got to that area, the current area we are in, we did have a very nice reaction. Made me think, we're going to have a possibility of a much higher follow through move. We didn't do that. We didn't get that. Actually, the second time around, it was very, but very, very weak. Then, so far, since we broke those levels on the weekly time frame, it's been very, very weak. So much so that if we go to the, if we zoom in to the order block, you can see that there was very little. Look at the wake of last week, the lower wake of last week's candle. I mean, that's so weak. And it closed as a bearish pin bar, right? So, and that's where does it do that? It does that where, the buyer should be coming in. That's the bullish entry order block on a weekly time frame. And I'm missing a move. We did get a reaction from this low, right? Which was very nice. Let me see if I can, from that low from 2 weeks ago to this high, there was a very promising move that we saw last week, but it was short-lived. It was very short-lived. It was very powerful as it was enduring, or it was taking its, trespassing. But after reaching that order block on the daily time frame, we have the supply zone we have here. It just kept on melting, just coming down, and that weakness hasn't changed even while we're testing for the second time that lower border of that entry order block on the weekly time frame, right? I was expecting some kind of a move from here. We haven't gotten that, and I'm starting to doubt that we're gonna get any other bullish reaction from this weekly. It's only the first day of the week, right? So many things can happen. We can still mount a reverse from here, but we're clearly squeezed to the downside, right? So it looks weak to me. I need a lot of convincing to be thinking this can still reverse. So I'm on the sidelines on that matter, based on that weekly. And on the lower time frames, the H4, which is my time frame to get me started on a entry on a day trade, I don't see anything but weakness. And I don't have any structure. The last structure we had was this bearish order block, right? We haven't gotten back to retest it. So to me, I'm, I want to be selling at a supply zone and buying at a demand zone, but a fresh one. And we don't have that yet. So we need to still, at least through the way I trade, I still need to wait for more data, maybe today, maybe tomorrow, to see how, if we're getting any structure new, so we can, trade from it. What about you, Alex? What are you looking at? You said a buy opportunity on euro. You're muted. You're muted.
Brilliant. There you go. And thank you very much, Victor. So the reason why I've only normally I would actually put in a full 1% on this is, first, we're actually in a range, and obviously euro is pretty weak. We had this quite big push down, a lot of orders in this area. If we were looking at, let's say, futures, I'm sure that there would be a really big wick or a really big influx of volume right around here, and now you're having this kind of range. Now, I know I am trading within the range. The reasons why I'm happy taking this position is because this is kind of like a bread and butter setup for me. Normally, I would like to see an actual break of the top of the range and then a retest. But on the 1 minute, the momentum looks like it wants to push up. You can see that we've had this consolidation. We're not breaking through any of these lows. And now we've had a break above the 200 EMA. We found support on a nice 50 fib, and the momentum is now starting to push up. So that is the reasons why I jumped into this trade. But the reason why I put in half of my position that I would normally put in is just because we are still very weak and we are in a range. Normally, I would like to see the break of the range, then the retest, and then the continuation. This is still within the range, and that's why I've taken half of the position. Now, my profit target would be to take out these highs here. So let's say this was when the session, this is all of the earlier session for London. We've had the highs of the Asian range taken out. We've then come all the way down, found capitulation, quite a big imbalance, and now we're finding that we've had consolidation. Now maybe come back to return to the mean type of trade to take out all these highs up here that were made at the earlier of the London session. So that's the thought behind this particular trade, and that's the reasons why I've got in. That was a mouthful, but that's the trade we're currently in right now.
I see. If I were to, you're already in a long,
Yep.
and your basis for that is based on, of course, the EMAs that you're using, right? The momentum EMAs with the mean regression to some EMAs, a higher, slower EMA. That's very interesting. If I were to look at the same your setup, if I look at the H4, I'm still, maybe it's because of course I'm much more selective, right? I want to see on the H4 that the buyers have come in, and I don't see that yet. There's all red candles, and we, at least on the H4, there is no basis for me to look for a long. But the momentum, I like how that you're getting in quite early, because you're getting in when the market hasn't really shown us yet that it wants to go, other than what you're seeing, those EMAs being reclaimed and broken. So it's an early entry. I like that.
We've got to look at it. It's quite funny because I never really get the big moves. I always get the little moves. And the reason why I get in the little moves is because within all of that 4-hour price action, you've had really aggressive push downs. You've had the consolidation, you've had another push down and another push down. So if you go back on the 4-hour, it's waiting for that breath. It's all under the water. Price action is under the water. Now it's just looking to take that breath, come back into homeostasis, or that middle ground, and that's all I'm trying to take. I'm not trying to get into the next leg down. I'm not trying to, obviously, if we look at the weekly looks bearish, the daily looks bearish, everything is bearish. European Union, everything's going to blow up and it's going to pop. But on that smaller, that with everybody going short and all of that capitulation, you've also going to have a little bit of profit taking. You're going to have a little bit of that breath. And that is all I'm taking. That small bit of momentum to take the 10, 15 pips that I need. And that's it. Now, I did get into a trade earlier today on a different account, the same type of setup that actually failed. I can show you here, which was this setup. So the same type of thing, breaking, consolidated a little bit, broke above the EMAs, and then the aim was to take to the 200 EMA. It's my bread and butter setup. Unfortunately, I got caught and it failed, and that's totally fine. But this one that's already had, this is a little bit more of convincing consolidation for me. If we have a look at different examples, let's say maybe, let's have a look. This one would be the same type of example, but it's not, you didn't really have enough space. When there's quite a big imbalance, let's say an imbalance of price right there, I'm looking for price to actually come back into that space to hit in a 200 EMA. Let's see if we can find a different example. We can look at on a short form as well. You can see the same thing with shorts. Let's say, for instance, here, price is consolidated because it's just the exact same, just the opposite way. Price is consolidated into this type of range. You can see it's broken below the EMAs. So prices coming broken below the EMAs, had a retest, continuation down to hit the 200 EMA. It is literally, it's the same whatever way you're looking at it. The reason why it works quite well in Forex is because Forex is a ranging market. You don't see like crypto that when it goes, you know? You can't have a currency going 10, 15%. So you have a currency that bounces around 0.6 on a good day or 1% on a really, really volatile day. And that's all it's trying to do. The same thing is here. It's not breaking above the highs. It's had all of these different wicks. It still hasn't succeeded. And then all it's done is break under the EMAs, hit the 200 EMA, and then it's consolidated more. So that's the way we trade, or the way that I trade, and we'll see if this actually completes. But at the moment, it looks okay.
Yeah, I think it makes a lot of sense because you can see clearly also on the, if I were to change my to put my screen on, I can see that on the weekly time frame, right? It has in the narrative of the market. To me, the market has already shown us by this move today, the first day of the week, by squeezing and going way below this structure, although the structure is still valid, hasn't been invalidated, by going so much away from the structure. I call that a squeeze, right? This is about 45 pips below the, what is supposed to be the line in the sand for the buyers to come in. It's clearly that the sellers have made their point. This structure is weak. It's likely not to hold, and the sellers are in control. That sign is loud and clear. So for the market, after giving us that cue, to expect the market to come back, take that breather, as you say, Alex, makes a lot of sense because they're made their point. The sellers are in control. They push price much lower. It looks very, very weak. It looks like that weekly time frame, although there are still 4 trading days to go. It looks from this point of view that this is not going to hold. And to me, while you were talking, that lower boundary of the weekly time frame, weekly order block, is the pivot to me. That's the test. If we can reclaim this level, and I'll tell you guys what level that is. If we can reclaim 102.22.7, right? It doesn't have to be that precise, but if we can reclaim that level and keep above it, to me, that's a bullish sign. Even if we don't create those bullish structures yet, it seems like, to me, that would be meaning that the buyers are not completely blown away. They're not completely broken yet. But as long as we are staying below that level, I would be cautious, although it makes a lot of sense, as you said, right, for that retracement, a little bit correction rally, if you will, to come into maybe today, maybe this week. It makes a lot of sense, right? They made their point, that the sellers, and price can go higher from here and it'll still look very weak because what structures will they have to break on the H4 for us to get bullish again, right? In terms of the structure, it's this bearish order block on the H4 that they have all this room, right, to come back and retrace, get that breather before they probably have their continuation to the downside. There's a lot of room for that. So I see your point, and I think your setup looks. It's not part of.
It's nice. It's the momentum when you're looking on the 1 minute as well. You really do get to see the momentum. And after we've had such quite a volatile London session, I got caught in that myself. You know, it just needs that return to the mean trade that I like doing. Yep. It's just it is golden. And we'll see. This area right now obviously can be a little bit of an issue because you've got a 50 EMA. If you have a look on the 15 minute, a 15 EMA, it hasn't really broken. It's found a lot of resistance at that 15 EMA. So this could be now we've broken up above the into this range. We could have something that maybe a retest back into this area of prior demand, so prior demand pre-break, and then we can have then the continuation just a little bit higher to then fill in some of these areas right here. That's what could happen, or the opposite happens where it's now hitting that 50 EMA on the 15 minute, and then it just comes back down and just makes another leg down. I don't think that's going to happen, but that is something that we need to be prepared for. Now, I've seen the price move. If it comes back down, I don't want to be in the trade. So that's why I'm going to move it just underneath this low. All of this area here, you've got this as support. So these are walls of support. If one wall gets broken, then I've got the next wall to protect me. If that wall gets broken, then I don't want to be in the trade. That's how EMAs. That's how I use EMAs, and that's how I've seen the best results with EMAs. Nothing about crossovers, because I feel like people still trying to use crossovers for EMAs is just the wrong way of using them. If it works for you, then fine. Just use them just for those bouncing points and those dynamic areas of
support and resistance.
Resistance, yeah.
Yeah. A crossover is fine. I mean, they're telling something about the market and about price. The only issue I have with crossover is they're very lagging. By the time by the time it crosses over, you know, the majority of the move is already done. So you're about to
get a retest. You know, as soon as you get a crossover, you're about to get a retest. Yeah. And then let's say you get into short, and you've just got a crossover, and now you're just, you know, you're underwater straight away. So
yep. Yeah, nothing wrong with crossovers. I mean, you can build a system on any based on any indicator, on any settings. I mean, you just have to look for the edge, and I'm sure there's something possible. You know, although it might be small, but there's, you know, just about any indicator you can look for its signal, and that includes crossover as well. But I'm not a fan at all because of those because of the reasons mentioned. Someone asking, are you taking partials, Alex?
Normally, no, I don't take partials. I've now started to trail stops. I never used to. I'm just more of a set and forget type of person, but I'm starting to trail stops. Partials, not really, but I've got a foundational edge where, you know, if I was going to just trade this all the time, then that's fine. But there are definitely ways to improve that edge, and those are things that I'm testing now. Partials, I don't think I'll be taking partials. More that if a move, let's say mostly on gold, I'm not going to do it really on currencies, but on gold or on commodities, crypto, I'm going to start pushing, trailing my stop a little bit more underneath the second lower lows or lower highs, whatever they are, in conjunction to the trend. But that's it. I'm not going to be taking partials now.
I see. All right. Let me see. There's a couple of questions here. And I see in the background we have Dr. Deanna joining us shortly. Um,
What I'll
let's
do
see.
then, Vic, I'm gonna get off, and obviously you can do the rest of the stream with Diana. And once Diana leaves us, I'll jump back on and keep you company for the last little bit. But I'm sure we'll see what happens to this trade as well when I come back on. All right.
Thank you. Thank you. No problem.
See you later.
Perfect. We have let's see. We have Diana in the background. Are you ready? If you could give me a hand sign whenever you are, I'll put you. Oh, there you are. Perfect. Well, on that note, let us bring Deanna, Dr. Deanna Cole, to join us. Let me clean. How are you doing today,
I'm,
Deanna?
I'm doing well. How are you? Can you hear me okay?
Yes, yes, we can. So we have people in the audience who are very excited for your arrival to our show today. Um, what can you tell them for those who don't know you? How would you introduce yourself to the audience?
Yeah. Well, thank you so much for having me. I'm super excited to be here. My name is Dr. Deanna Cole. I'm a licensed clinical psychologist and a full-time futures trader. So I started my prop journey with the Fivers before Americans kind of got the boot. And so I was trading with the Fivers. And then after the whole MetaTrader situation, I switched over to futures. So I have personally found it really helpful to incorporate a lot of what I know about psychology into my trading. I was trading without really giving a whole lot of consideration to trading psychology. And once I really started to incorporate trading psychology, it really helped me a lot. So I'm happy to share with you today, and I hope everyone has some good questions and I can be helpful.
Yes, I'm sure they will. You're getting a lot of love from the audience as well. I think it's this topic, right? One of the pillars of of any trader, of a profitable system, of profitable trader, I should say, is the psychology part, right? We have the system, you have the risk management, and the psychology, and I find that to be in my experience as a trader, but as well as people who I work with, it is the most difficult part. The system building, you can teach someone that. The risk management is it's also something you can learn, but the psychology part, that goes deeper into how you are, about your habits, about your thoughts, and it fluctuates with time because we as individuals, we're not the same person every day. We might have a more stressful week or whatnot. So I find this topic to be very valuable for everyone who wants to become a better trader. Um, you said you're a clinical psychologist. That is so. You what is your how did you cross path with trading? Is it through your work that you start? You know, have clients that are traders, or was it the other way around? Did you start trading and then you thought, I should be including or incorporating my professional knowledge as well? How did it
That,
happen to you?
that's a really great question. So I was a psychologist first and foremost, and I married someone in the military, and we moved every year and a half to 2 years. And so I I finished my doctorate and was ready to start practicing, and then was in a position where I was moving every year and a half, 2 years across the country. And it was really complicated to be a psychologist, to have a practice. So at the same time, my husband was really interested in trading. He was active duty military, but he had been introduced to trading and was really interested down the road in seeing if he could, do it as a full-time profession. And so I sort of reluctantly at first started reading some books and started learning about kind of a longer term, I would say more like investing, but trading, but like more like swing trading. And I just got bit by the bug. I just absolutely fell in love. And, that was, I guess, like 15 years ago now. And I just absolutely fell in love with trading and became more and more involved. And that became more and more a part of my life. So I basically jumped ship to full-time trading. When I was with the Fivers, I guess this was about a year or two ago, I had a system, I had an edge. I understood, or I thought I understood, risk management. And I passed challenges, but I could not confidently and consistently keep my funded account. And I kind of had to go on a little bit of a soul search. Now, I personally was not really incorporating psychology into trading because for me, when I thought about trading, I thought about your system, your strategy, right? And risk. And I thought those two boxes checked. And so whenever I ran into any kind of issue or any kind of trouble, those were the things that I looked at. Okay, what's wrong with my edge? Why is my system not working? How do I need to risk differently? And I just sort of kept experiencing like success, and then I would hit a wall and I couldn't quite sort it out. So I ended up kind of taking a step back and looking at how I needed to incorporate psychology for myself. So I had it sort of like in my back pocket, but I had never really brought that aspect of my life into trading. I worked in assessment, so mostly with brain injury patients, traumatic brain injury. So it's a very kind of objective. It's not like the touchy-feely psychology. And so that's not really who I am naturally. And so I guess looking back, it seems kind of crazy that I didn't think about bringing psychology into trading. But that's not kind of inherently who I am, calm, relaxed, those types of things that you want as a trader. And so it just took me a little while to figure out, there's something to this. I can really bring this aspect and work on this aspect of myself and improve my trading. So it just took me a little bit to catch on that I really could meld the two.
I see. So, and this happened, that crossroad you said about, you started trading 15 years ago, but when did you start incorporating your, professional background into your trading? When was this? Is this closer to the 15 years ago?
No, it was fairly recently. So I think the challenge that I passed with the Fivers was about 2 years ago. And to be honest, when I passed the challenge and then failed it, that was my first time, failing a challenge. I had gotten funded and failed it. And it really set me back pretty hard. I questioned everything that had to do with my system, and I really couldn't get out of this funk. I had a really hard time with it. So that was only about, I think, 2 years ago. So really in the last year and a half, 2 years, I've really started to think about how psychology ties in to myself, my system, how I take risk, how I manage risk. So it's pretty recently for me. I know that probably seems a little crazy to say that, but it has been fairly recent.
I see. Well, but the thing is, perhaps you start incorporating it relatively recently. Mm-hmm. However, you have been a trader for a very long time, right? You mentioned 15 years ago, more or less, you started trading, and you are, you have a very long time in psychology, since that was your profession. You were actually practicing already. So those two things you did have, perhaps separately, but you did have a lot of experience. So it's only recently that you were, putting them together, but you bring a lot of experience on both sides. So it makes sense that you are so confident in your results now. What can you tell us, right? Let's say someone's watching us and saying, well, okay, great. I have someone who is a psychologist, is also a trader. She knows exactly what I need, what the techniques are, and what are the things that I need to focus on. What are the, a couple of things, the main things that traders do wrong? Maybe what's your top three things you think this is what we, and especially an aspiring trader or someone who's starting out, this is where you need to focus your attention to in terms of psychology and mindset and so on. What are the top three things would you say?
Okay. Two instantly pop into my head. So I'm gonna give you my top two and then I'll add a third one. The most important thing to know about psychology as it applies to trading is that there's sort of a, we talk about trading as your method. So that's your strategy, your money management, that's your risk, and then your mindset or your mentality. That's the trading psychology. But when we're talking about trading psychology, a lot of times people talk about emotions and how their emotions impact their behavior. One of the basic premises of psychology is that there's sort of this, you can think of it as like a triangle, right? There's your emotions, there's your behavior, and then there's your thoughts, your thinking or your cognitions. And what's really important to recognize is that all three of these aspects of yourself are interrelated. So as a trader, typically what happens is we engage in behaviors that we don't like, right? Revenge trading, tilt, over trading. Those are all things that we think this is from emotion, right? I got angry. I was scared, so I got out of a position too early, those types of things. So emotion impacts your behavior, but your behavior impacts your thoughts and your emotions impact your thoughts. And likewise, your thoughts impact your emotions and your behavior. Okay, so imagine they're all interrelated. So if you are having trouble with your emotions when you're trading, or you're having trouble with your behavior as a trader, right? Doing the wrong things, not doing what you intended to do, it's really, really helpful to think about what are the thoughts behind those actions and those behaviors or those emotions. So, for example, if I'm really struggling with fear, right, that is a predominant emotion for me as I'm trading. Think about what are the thoughts that are fueling that fear. For example, it might be, I have to make this work. This is a make or break it situation for me. If I can't win this trade, I'm a failure at trading, something like that. Think about what those thoughts are that are impacting your emotion. And then also think about the same thing with behavior. If you're behaving in a certain way, why is it? Not just your emotions, but why is it? What are your thoughts in your mind that are causing you to have those behaviors? And the reason this is really important is because behavior is paramount in trading, right? What we do is really important, but emotions are largely out of our control. So they are automatic, natural processes that happen in our body. And largely, we cannot control them. We can prepare for them, but we do not have full control over our emotions. On the other hand, your thoughts are 100% your own. You are completely in control of your thoughts. And if your thinking is not serving you, it's not working well for you because it's impacting your behavior in a certain way, focus on changing your thoughts. You have total control over your thoughts. So that triad is really, really important to understand. A lot of times I hear traders say, I journaled about my emotions, and that's a really big piece of a journal. To me, I almost never include anything about emotions in my journal, very, very rarely, because it's really, to me, more important. What was I thinking? What were the things that were going on in my mind when I, revenge traded or over traded or whatnot. And that way I can really focus on that after the trading session. So I'm going to incorporate a second one with that. When you think of trading, a lot of times we think of trading at the computer, pushing the buttons. That's the trading session. But it can really be helpful to break it down into a pre-trading, trading, and post-trading. When you're focusing on your emotions or your thinking and how it impacts behavior, you can put in the work ahead of time. So doing things ahead of the trading session to help you be, the best version of yourself as you're trading. There's things that you can do during the actual trading session, right? To calm yourself down, regulate your nervous system. And then for me, after the trading session is a really, really important time as well to reflect on what I did, take my dogs for a walk and think about, what happened in the session? What did I do? How did I contribute to my success or my struggles for the day? And what do I want to do different in the future? So even like a journal can be a walking journal. You can go outside and walk and think about, the changes that you want to make. And then the third one, which is actually, I think, super, super important is, although trading psychology is really important when we're talking about, you have to have an edge, you have to have a system or a method, you have to have risk management, and trading psychology is really important as well. In my opinion, risk trumps all of those things. If you are really, really struggling with emotion while you're trading, more likely than not, risk is what you want to check in with, because you can have the best trading psychology in the world, but if you're trying to pass a prop challenge and you're taking too big of risk, you are absolutely going to experience emotion and potential destruction of your account. So you really, really need to focus on risk. And again, if you have a lot of emotion while you're trading, lowering that risk to the point that you don't get the sweaty hands and, the sweaty face and the sensation in your stomach, the nervous feeling, it all comes back to risk. So to reiterate the third point, really, really dialing in on your risk. Slow and steady wins the race. It doesn't feel like that, but that can really help with trading psychology as well.
Perfect. So you said the first point was focus on your thought, understanding that your thought, emotions, and behavior, they're interconnected, and each one of them affects the other two, and you can't control your behavior and your emotion as well as you can control your thought. So focus on your thought in a way as an instrument to control the other two or to influence the other two as well.
Right.
That's a great point. And the second one you said about journaling, but breaking down your trading session into 3 parts, right? Pre, during, and post. And if we're not putting in your emotions in the journaling, what are you putting exactly? You said thoughts, but how would that be like if, let's say, any given example, let's say I had a couple of losses today. What do I want to be writing down? The exact thoughts that I had at that moment, or before, or what exactly? How should we do that?
I'll tell you exactly how I journal. I personally think it's the very best because it's so easy, so simple, and actually helpful. So in the past, I've tried all different, like a diary style journal. None of that has been particularly helpful. And if it takes too long, I'm not very likely going to do it. Maybe I may, it's like a New Year's resolution. I'll do it for a couple of days and then don't do it again. This is exactly what I do. So I have a calendar in Notion. Notion is free. And every day I start, a calendar entry. A lot of times I'll post screenshots of my trades. And then at the end of the day, I developed a 3-point system. I didn't develop it. I'll actually tell you the history of it. My husband in the military was a fighter pilot. And he told me that after the pilots go out and they fly their mission or whatever, they come back and they have a debrief. And the debrief consists of 3 points. First is safety of flight. Goods is the second one, and others is the third. So safety of flight in their debrief was there anything that happened in this, in this mission or this flight that could jeopardize somebody's life, the airplane or, the aircraft or whatever, safety of flight. Okay. To me, that translates like, did I do anything in this trading session that could jeopardize my account, my challenge, whatever it is that I'm working on? The safety of flight types of things would be going on tilt, risking too much, losing my mind, right? Generally speaking, I never want to have a safety of flight, but it can happen, maybe once a month. Maybe you might be in a situation where you're still experiencing safety of flight, once or twice a week, even. Whatever that is for you, the goal is over time to have less and less and less safety of flight. Okay. The second is goods. So goods are whatever you did in your trading session that you did well, that, was a positive for the day. So you absolutely must have at least one good. And it can be things like, I was calm when I sat down at my desk. I was in control today of my emotions, of my behavior. I took screenshots of my trades and I documented my trading day. Maybe you were just horrible in the trading session. I've had some of these where you are like, I cannot think of a single good that I did today. Okay,
Yep.
well, maybe after your trading session, you took a walk and you reflected on what you wanted to do better. There has to be a good. Okay, so just like, come up with something that maybe you furthered your learning experience as a trader by watching a YouTube video after this, after the trading session. Maybe you did some yoga or you went to the gym and that benefits your trading. So as far as you have to reach, you must find a good. And then the last is others. So others are a positive spin on what did not go so well. So these are things that are not necessarily going to jeopardize your account, that are not going to kill your account, but that you need to improve on, right? It could be something like I exited a trade, before it hit the take profit. I got a little too scared. My self-talk was not the greatest today. And it's really important to try and frame these things in a positive way. So when I come up with something that is in the others category, I try to say it like, if you're coaching and you tell somebody, don't drop the ball, right? If they're playing football or baseball, don't drop the ball, right? That thought in their head is, oh my gosh, don't drop the ball. A better way to do it is say something like hug the ball in tight to your body, okay? Make sure when the ball comes in your glove, you watch it go all the way into your glove. We want to keep those same things in mind when we're thinking of our others. So something like if your self-talk, let's say, was not that great, you were really critical of yourself today, you were thinking, gosh, I'm such an idiot, I can't believe I did that. I went on tilt second time this week. What a bozo, I'm never going to make it. Okay. Instead of doing something like that, you can spin it in a positive way. Like, really make sure that you're focusing on saying the things that are positive to yourself. That can be an other. You're saying, hey, I didn't do so good at that today. I didn't do so well at that today, but spinning it in a positive way. So I typically have others listed, but I don't always. Some days I'm just like, it doesn't happen often, but some days I'm like, hey, I pretty much nailed it today. And that's okay. So if you don't have an other for the day, that's fine. You typically don't want to have a safety of flight, but hey, they happen. And you always, always, always must have goods for the day. So I personally write all that down in Notion, but a lot of times, again, I walk my dogs and I think about these things and just go through those three things. And that is really, really helpful. To me, that's all I need. I do it on a daily basis. And then on Friday, it takes me like 30 seconds a day. On Friday, I spend an extra minute and I copy and paste them all on the Notion calendar Saturday. And then I just collate them and say, okay, what did I do well this week? How many safety of flights did I have? What am I working on? What are my others this week? At the end of the week, then I copy it down to the last week of the month and I do a monthly. So that takes another, 2 minutes. So 30 seconds a day, extra minute on Friday, and, maybe a minute or two at the end of the month. And you have daily, weekly, and monthly journaling. That's really helpful and really effective. And you can look back. Hey, I had 2 safety of flights this month, but you know what? Last month I had 4, and the month before that I had 6. That's a really helpful way to sort of track your progress in a way that you're not going to necessarily see in your stats, although it probably will show up in your stats. But you want to know exactly what it was that you were doing well, and what your strengths as a trader are.
Nice. Very powerful stuff. I like that journaling system you have. You're focusing on saying the same thing, just not in a negative way, but in a positive way, while you're correcting yourself. What you said about don't let the ball fall or touch the ground, something like that. That's like danger. It sounds like you got to watch out instead
Right.
of doing something affirmative and positive, which is easier to our psyche or mind. I think that's important. You mentioned self-talk quite often. How important is self-talk to you for a trader, right? The process of talking to yourself, to say things out loud, uh, to formulate or form your ideas, or
Yeah.
deal with having that self-discussion with yourself. How important is it in your opinion, for a trader to have some kind of self-talk?
It's everything. It's the most important thing that you do, not only as a trader, but in life. If you want to be accomplished and successful in any area of life, whether it's an athlete, as a parent, as a spouse, as a trader, it doesn't matter what it is. Your self-talk is not only extremely important. How you think about yourself, how you talk to yourself is of utmost importance. But again, you have total control over it. It's totally in your power to tell yourself whatever you want to tell yourself, right? Now, this might sound like I'm encouraging you to lie to yourself, and sometimes I am. So sometimes when I'm trading, I need to tell myself things that maybe don't fully sound true, right? Same with when you're dating or something and you're telling yourself, I'm confident, I'm calm, I'm ready to do this, I have a lot to offer. Maybe most of that is true, but maybe you're not feeling really confident, right? But focusing on that is not going to help you. Focusing, oh my gosh, I'm so nervous, I can't believe this, I can't believe this person would go out with me, I'm an imposter or something like that. None of those thoughts help you. The thoughts that help you are like, hey, I'm doing something really exciting, I'm doing something new, I have some confidence that's growing. I don't totally feel like I'm ready to be confident yet, but I feel like it's growing. That's totally true in trading as well, athletics as well. Focusing on what are the good things that you have going in your favor is super, super helpful and super important. And to me, self-talk, I personally, I know I saw Marina was here earlier. Traders that have watched me trade live, I try to do this not only in my head, but even out loud. So if I'm in a trade and it's going against me and I start to feel those butterflies, or, my hands are starting to get a little tense, gripping the mouse, and my body's starting to feel a little tense, you can use your body and your thoughts. So the first step would be to sit up nice and tall, shoulders back, head lifted. This sends a message to your brain, whether you believe it or not, that you're confident, that you're in control. And your brain doesn't know the difference between false confidence and genuine confidence. If you're sending the physical message like, I'm calm, I'm cool, I'm in control, your brain doesn't know. And so you can use that to your advantage. But then thinking about, even if you're freaking out because this trade is going against you, I like to say to myself, this is a valid trade. I risked appropriately. Every trader takes losses. Losing is part of the game, and I have to be okay with losing if I want to be a trader. That was a game changer for me because I don't like to lose, right? I want to.
Who does?
Yeah, who does? I want to take every trade be a winner. I especially want to know that I know what I'm doing, right? Especially when you're learning to trade. One of the hardest things about it is I remember when I was first learning to trade, and they would say, if you take a loss, dissect what you did wrong. Okay. So I was learning different patterns, and it was like, I would take a loss and I would study this pattern and try and dissect what did I do wrong. But the trouble with trading is sometimes you did nothing wrong. It just was a losing trade.
Mm-hmm.
And so trading is really difficult because there is no right or wrong. And my system is going to be different than your system. It's just really, really complex. And that's why back testing is really, really can be a big part of what you do. But it is important to develop your system and then work on yourself. So work on, hey, I did this in back testing. I know that I'm going to take losing trades. In fact, I'm probably going to lose, half the time. So this is within, my expected parameters. I rely a lot on statistics when I'm trading, because sometimes you get really big strings of losses and it doesn't feel right. It feels like you're doing something wrong. Oh, sorry. It feels like you're doing something wrong, and it's not always clear. And so talking yourself through that experience is really helpful. So lean in on self-talk and pay attention to that. If you were going to write anything in your journal, emotions are fine. You can include emotions if you want, but pay attention. If you do nothing else, if you take nothing else away from this session, next time you're in a trade where you're like feeling your heart rate change, or your breathing change, or you notice your body, use your body to your advantage. Sit up, shoulders back, head lifted, and then just tune into your thoughts. And you can do this in a live trade. Even if you're scalping, even if it's fast, think about what you're doing. One of my favorite traders to watch trade is Saul. He has a really fast method, but man, he can stay calm. When price is moving, and he just stays locked in. And I have only seen him kind of get his feathers ruffled maybe like a time or two. So that is really helpful, watching somebody like that trade who can just stay so chill, so into it. And it's helpful even to see that even Saul, as great of a trader as he is, and as calm as he can stay 99% of the time, even he sometimes gets, he experiences the emotion. And so having some grace with yourself, it happens to everybody. But you can do something about it to help you, just calm down a little bit and continue to execute on your system.
Nice. I think you're spot on the importance of self-talk. I'm not a psychologist, but I've done it, intuitively all my life, also in trading from the beginning. And to me, that's the mirror where I can, or maybe that's the window through which I see myself, right? Where I can see what am I doing, how is my thought process, and actually my emotions, they come out in that self-talk as well. So it gives me my emotions, my thoughts, myself, and to me it's awareness. To me, self-talk is awareness. To me, it makes me aware of how am I thinking, feeling, and what I'm doing. And at the beginning I was a little bit reluctant to do it, but I do it out loud, for example. And I think you I love the fact that you mentioned that it's very important, because that's the experience I have as well. Dr. Cole, we have a question here in the audience. Someone asking, Adam asking, what's the biggest mistake you see beginner Forex traders making, and how can they avoid this? What would your your response be to Adam and to everyone else wondering the same?
I would say risk. How much risk you take is super important. We all, whether you're doing a challenge or you're working in your account, a lot of us are go-getters, right? We want to work harder, push harder, go faster. And that's, really can be detrimental in trading. Taking it slower. I know no one wants to hear this, right? I don't want to hear this. I'm a fast-paced person. I like to go, go, go. I want to push hard, be aggressive, and push my account forward. And that doesn't really work that way, unfortunately, in trading. Taking slower, taking lower risk helps you to think clearer, make better decisions, avoid tilt, avoid revenge trading, and understanding that the compounding happens a lot faster than you think it's going to. But if you're trying to pass the challenge, now I would say if you're trying to pass the challenge, this is a little bit different because sometimes you might want to take on more risk. If you think of it, the way I think about it is a challenge is a little bit less valuable than a funded account. A funded account is more valuable. So to me, I'm going to take more risk in the challenge phase with the understanding that a challenge might get blown and I'm okay with that. If you're not okay with that, then maybe you treat it like a funded account. But really slowing down the risk and letting it build over time. Not only will that make you a better trader, because you can just think clearer, right? You can just make decisions better and think clearer about what you're doing, being more, like you said, Victor, being more self-aware of what you're experiencing and how you're impacting your performance. So focusing on risk.
Yeah, I think that's very important. Risk is it changes everything. I mean, how you feel, how you act. If the risk is low, you are to me you're in a place of strength because you can decide, you can think more clearly, you can decide better, you can make better decisions because the risk is not an issue. It's not bothering you either. You can see the things for what they are.
Right.
And yeah, right. Instead of making decisions that are perhaps not because of the price action, but because of the risk is too much, right? It pushes your button. So I think, yeah, risk is a major topic right there. Another great question from people in someone in the audience. What is your? Of course, you talked about emotion. And your thoughts and your behavior as the three things that how would you say that define us psychologically as we in time, right? Those are the things we feel, we think, and we do. How and this is, and we all know how important behavior that part is, right? Because of course that's what we do. We are what we do all the time, right? That's the person we are. So what tips can you give or guidance can you give us in affecting or building those positive habits, right? The behavior part for people in the audience. What advice can you give us?
Yeah. So I'm going to focus on the word in the question is habit. So focusing on habits. Habits are hugely important to traders. As somebody who has in the past felt like, I know what the right behaviors are. I know what I'm supposed to be doing or what I'm trying to do, and yet I'm not sticking with that. How can I be a successful trader if I can't even do what I'm trying to do, right? And it comes down to habits. So when you think about habits, there's basically three parts. There's the trigger, or what starts this habit pattern. Thinking about the habit loop. There's the trigger, there's the routine or the behavior, and then there is the reinforcement or the reward. Now, when you're thinking about a negative habit and you're saying, okay, well, let me finish that thought. So when you're thinking about behaviors that you're doing that are not positive, that are not what you want to happen, you need to think about what is that process, right? For me, if I am very stressed, I am unlikely to trade very well. to follow my plan, to do what I intend to do. So for me, stress is a trigger. This summer we moved and it was very stressful. It impacted my behavior, right? Now, you might be thinking, okay, well, then there is no reward or reinforcement. But even bad trading is thrilling. Okay. So that's really important to realize. Even when you go on tilt, your brain is, even though it's bad, right? It does damage to your account. Your brain is going, gosh, that was fun though, right? I got a little bit of a thrill from that. So even when you are losing control and doing something crazy, you are still getting a payoff or a reward mentally. Your brain is saying, wow, I just lost my, I just went bananas and pushed the buttons as many times as I wanted. And boy, that felt good, right? Even though it does damage to your account. So really important to think about that process and what you can do with that, knowing that there's a trigger, a behavior or a routine, and a reward or a payoff. You can disrupt that. So if you know, hey, when I'm really stressed, it negatively impacts my behavior, and that's a bad habit loop, you can make decisions. Okay, well, if I know the trigger is stress or the cue is stress, I can make the decision, if I'm moving, I should not be trading, right? Because that is going to create a bad habit loop. Another alternative would be to say, hey, I know that moving is going to be really stressful, so I'm going to have to put in extra work to make sure that I don't get stressed, so it doesn't impact my behavior, so that I can continue my good habits. So I hope that helps, thinking about what the cue is and where you can disrupt. I talked about disrupting the cue or the trigger, but another thing you can disrupt is the behavior. So if I know a cue or a trigger for me is when I take a loss, I am likely to go revenge trade. And then I get the reward, that psychological mental thrill, right? My brain, even though it's bad, my brain says, wow, that was exciting. Okay. Maybe I need to disrupt that habit loop by saying, when I take a loss, I get up and I go to the kitchen and I, do a lap or whatever, 5-minute break before I take my next trade. Maybe you don't even need that big of a disruption, but maybe you need to stand up and stretch. So I take a loss. That can send me into tilt or into revenge trading. So I'm going to disrupt that process by saying, I'm just going to stand up at my desk, do some stretches, do some breathing, maybe just a bathroom break, whatever it is for you to sort of disrupt that cycle, disrupt that loop that you go through.
Nice. So you mentioned that loop, right? Very interesting. The trigger, the behavior, and then the reward. And you think, or you suggest for us to think of each. In the case of habits, what is the trigger? What is the actual routine or habits we have, and then what is the reward we get from it? And we try to pinpoint, right? Identify what can we change to change that habit, so we don't have that same behavior again, right? In the case of revenge trading, you try to avoid the trigger, or try to make it less favorable or less likely for you to go into that habit, meaning not trading at all, for example, or taking that little walk or stretch and stand up. What about rewards? What can you do for as a trader? What would be a good reward to change and reinforce those positive habits?
Yeah, that's that's a great question. That's dependent on you and what motivates you. One that just immediately pops in my mind, though, is when you pass a challenge with the fivers, you get a little certificate. That could be really rewarding. Let's say that you did a really good job, you passed a challenge, you go to CVS or Target, wherever, print off your little certificate and buy a frame and put it in a frame on your desk. Maybe that's rewarding to you. Maybe a glass of wine is rewarding. Maybe a walk with your dogs, a trip to the gym. It can be a little reward or it can be a bigger reward. And it really comes down to what motivates you. I've also seen you can do something if you're like a tactile person where you get a jar, okay, and maybe you have like some stones or like a counter, like a penny or something, and every time you avoid tilt or you follow your trading plan or whatever you want to define it as, you get to take one of those little stones and plop it in the jar, and over time you get to watch as that jar fills, right? I mean, watching it fill is rewarding in and of itself. Maybe when it's full, you have some kind of extra special thing, maybe you go out to eat, or maybe you go to your favorite store and buy a sweatshirt that you've been wanting, or whatever it is for you.
Mhm.
You can be very creative. It can be small, it can be big. Yeah, those are some ideas.
Nice. I like that one. That jar idea. I like that. It makes me. I don't do it, but I like the idea, because every time you put in that marble or stone or whatever it is, you can see it all the time. Especially if you have it in front of you, you can actually. It's a reward that you keep on seeing, so it keeps on rewarding you. I like that idea a lot.
I will say too, when I do my journal at the end of the day, the 3-point safety of flight, goods and others, I find it very reinforcing to not never, I'm not saying I never do it, but to always be able to say safety of flight, none. That to me is very rewarding. That's a mini reward, but still it's okay to celebrate that and to be excited. Wow, I said none. The flip side of that is if you do get a safety of flight, you're just kind of like very, okay, safety of flight today, move on. But when you don't have one, go ahead and just mentally celebrate a little bit. Maybe you have a trading buddy. I think trading is very lonely. As somebody who likes to hang out with other people and chat with other people, you need to go out and find people, even if it's online. However, you can connect with other traders. Discord is a great place. I think Discord is super fun and can be a great place to connect with other traders. And, maybe you find somebody that you hit it off with and you just, shoot a text back and forth. Hey, no safety of flights today. Or, hey, I followed my plan today. It can be really basic. We can celebrate super minor things, and it doesn't have to be a big reward or, reinforcement, but it can be too. So either way. Buy
Yes.
yourself
I
a
think.
PS5, it says. That's a good idea.
Yeah, I think it's a great idea to treat yourself with something nice, something might be something symbolic. It doesn't have to be an expensive thing. It's about the symbol behind it, the reason, the idea that you earned it, right? You put yourself, this is the reward when I get whatever I do, maybe as a week without any mistakes, or maybe a month, right? Whatever is relevant for that person. And then reaching that reward symbolizes much more than just the reward. It symbolizes that you're growing, you're becoming better, you're leveling up as a trader. And that is, a huge reward in itself, but it's materialized in something tangible, or perhaps something that you're doing. It doesn't have to be exactly tangible, but the thought, I think it's very I apply that in my on myself as well. I have like milestones, personal milestones, and I have like things that I like doing that I purposely not do, just to wait for that moment to reach it so that I can celebrate them. And those are there can be little celebration, but they're very I think they're very encouraging and stimulating for everyone.
Right. And even like, I know this is a really small, silly celebration, but my kids, I've told them, hey, ask me sometimes, and you can tell your partner or your spouse or whatever, your parent, ask me from time to time how I did today, And I told my kids, it doesn't matter how much I made or lost, but did I follow my plan? Did I follow my rules? Did I behave like the trader that I want to be, those type of things. Or, my kids usually just say, hey, how'd it go today? And I'll just say, great, it went great. Or sometimes, well, it was a bit mixed. I'll say it was a bit mixed, or like, from time to time, well, I wasn't at my best, this wasn't my best day. And, they know that means like, hey, I didn't perform the way I meant to perform. And it is not related to the P&L. It's just, did I do what I meant to do today? Did I trade the way I wanted to trade? Win or lose, did I behave how I meant to or how I mean to?
Yes, I understand that completely. I think it's very important to focus on the process and not the P&L, because the process is what is going to make you a profitable trader, not exactly the result of one specific trade or even a streak of trades. It's the process that will keep you and bring consistency to the table. So I think that's a huge point. We've got some great questions, Deanna. I hope we had more time with you. I see many questions here. We have another one. Says, how do you come back from a loss or a loss of an account? Right, you blown account. Someone loses, breaches the limits of their prop firm account. How do you mentally come back from that the best way?
Yeah, that's a great question. I have a video, someone wrote me a letter and asked for my advice on this. And I posted a video response on my YouTube channel. So you can definitely check that out, but I'll share a little bit of an experience for myself. So I'm a little fuzzy on exact timeline, but a year and a half or 2 years ago, when I failed my first funded account with the Fivers, it shook me to my core. I really was upset about it, because here I thought I had made this progress, passed the challenge, got funded, and then lost the funding. And it shook my confidence, right? I had a hard time executing the same way because I just wasn't sure anymore. I wasn't sure if I actually knew what I was doing. And it took me actually a long time to recover from that. Because at that point, again, I wasn't thinking about trading psychology in the way that I try to now. Having some grace for yourself is really, really important. So in my opinion, one of the best things about prop firms is that they are an excellent tool. Among other things, they're an excellent tool to allow yourself to learn. And so it is possible to even think about prop firm as like the next level. So if you're forward testing, it doesn't cost you any money. That's great. That's helpful, right? But for me, I need to have something on the line. And when I'm trading prop firm, I feel like it's real money, even though, if you're in a challenge, it's not real money yet, but I feel like it has meaning. And so the flip side of that is when that goes away, when you lose that, it can be really, really upsetting. And I think the best thing you can do is recognize, take a step back, take your time to reflect and think about it, and recognize your strengths and your weaknesses. So what went well and what you need to work on, just like the safety of flight goods, others. Maybe you're at the point where you're trading one challenge or one funded account, and so it means a lot to you, right? But it's really important to then look back in the rearview mirror and say, hey, you know what? A year ago, I couldn't even pass the challenge. And now I got funded. It's a total bummer that I lost my funding, but I'm further than I was 6 months ago or a year ago, right? And understanding that so many people lose challenges, I don't think it needs to be a bad thing necessarily. It just informs you about where you are in your journey. Where have you come from and where are you going? And the other thing is, I don't think it's a bad thing to use prop firm as an opportunity to learn. If you're trading your own money and you're learning to trade with your own money, it is extremely expensive. When I started trading 15 years ago, I had never heard of prop firms and I was losing my own money. It's much better, in my opinion, as a learner to say, you know what, I have $300, $500 or whatever to put toward learning how to trade. And you can use prop firm as a tool to help you learn how to trade. And it feels like a more elevated experience than forward testing. But when it doesn't go well, giving yourself grace that this is normal, this is part of it. The rules in prop firms are challenging. And so it's not unreasonable to fail an account or to lose funding from time to time. Just giving yourself grace and taking it as an opportunity to stop and reflect, what you want to do different. And for some people, failing prop firm challenges is a built-in part of the plan. And that's okay too. Maybe you take 10 challenges. I know not everybody does this, but some people are in a situation where they'll take 10 challenges and they'll only expect to pass, 3 or whatever, depending on their betting style. I'm not sure where everybody is here, but that's a valid way to do it as well.
I understand. So basically you're saying, be nice to yourself, right? Have grace with yourself.
Yeah.
And put things into perspective, right? Losing, taking it not as a failure, but just another sign, another information from your growth where you are as a trader. Right. Very, very good. I like that. Let's see in the audience, do we have any other questions? We have many good questions coming our way. What do you think about this comment, Deanna? It says, I feel good blowing the account than seeing it better, or I think they're saying better than seeing it in drawdown. What does this tell you about the trader that says this? That they actually prefer losing the account altogether than seeing it in drawdown. Isn't that weird?
That seems really weird, but I have personally experienced this as well, where that doesn't seem logical, right? It seems like drawdown would be better than blowing an account, but I personally am the same way. When I blow an account now I have a different strategy where I'm sort of like systematically risking. And so it's not a big deal to me anymore if I lose an account because it's kind of part of the plan. Before I had one account and I was holding on to it for dear life. And if it was in drawdown, that's really stressful. Once you blow it, though, you feel relief. And the reason is it's done, right? That stress is no longer on your back. You're no longer carrying that burden. Yeah, you don't feel good that the account got blown, but you feel relief that it's over with and it's done with. I know that sounds crazy, but I am exactly the same way. It's just part of it. And I think, at that point, it's fine to just, get back on the horse when you're ready and try again. But I don't think that's, I don't know if it's uncommon or common, but for me, it's the same exact experience.
Yeah, I think it's
odd.
Yeah, I think it's about getting closure on something. You stop suffering, basically. You stop the pain, right?
Right.
When you're in drawdown, you see the pain. You still think it depends on you, and it's not going well. But once it's done, you got closure. You can turn page and move on.
That's exactly it.
Yeah, when you're in drawdown, there's not turning page. You're actually watching the account, constantly just to see if there's anything you can do to, make it up or recover from that. So I think it's a very common. I don't know if it's common, but I can.
Yeah,
understand.
I don't know, but I experienced that too. So I don't know if it's common, but it certainly isn't like, I don't think it's weird or crazy. I think happens to me too. I feel like a big relief. The other thing is when it's in drawdown, you still have to make decisions. And so there's that stress of the decision making. When the account is blown, the decisions are done. It's already been decided. And so, there's a lot of relief in that. And it just makes sense that you would feel that way.
Yes, that is completely true. I agree to that. Dr. Diane, I'm very grateful you had the chance to join us today because you touch upon many important things on the psychological part of that we as traders need to deal with. And as traders, if we don't get the information from professionals, people who like you or other coaches, how are we going to get those good habits in? Because they're not natural sometimes, right? Doing the right thing is not always natural, especially in trading, because trading, a lot of things we need to do to be profitable is counterintuitive, right? And I think it's such a blessing for you to join us, and I hope you can join us again soon to share all those good insights, those psychological golden nuggets, I would say, that will help our traders in the audience as well. For people who want to get more of you, Dr. Deanna Cole, where can they find you? How can they get in touch with you?
Sure. Thank you for asking. I'm on YouTube. My channel is Trades by Deanna, so Deanna. You can find me there. I do have a Discord, but it's kind of it's not super active. So YouTube is the best place. I do see that there are some questions on there that we missed, and so I'll maybe keep those in mind, and maybe I can do a video or something to address some of those. Or maybe, like you said, hopefully I'll be back and we can answer some more questions. But yeah, Trades by Deanna on YouTube. I respond to all the comments, so leave me a comment. I'd love to see you there.
For sure, we should have you on again for those questions and many more. I think I'm speaking for myself. I have a couple of questions that I would like to ask you as well. So we are looking forward for that day. Diana, I would like to thank you very much for your time and hope to see you soon again.
Thank you so much, Victor. Have a great day, everyone.
Bye-bye. Take care. You're muted. Alex, you're muted. You're muted. You're still muted. Okay. I thought you were talking to us, Alex. But I think you are.
We were both clicking the button at the same time. Thank you, Diana. I was listening in the background to all of that. We definitely will have to get you on a panel with a few of the others as well, and we can actually talk, because this is one of my favorite pastimes, is thinking about the mental game of trading. It's one of the most important things. All the books and things that I read, I never read about technical stuff. It's always all about the mindset and all of that, about the mental game. And it's a very interesting comment what that person said as well, that he'd rather blow the account than in drawdown. I can understand it's super painful being in drawdown. Nobody likes being in drawdown, but you've got to overcome that, man. You've got to overcome that if you want to, if you really want to progress, because the majority of people are going to be in drawdown the majority time of their trading, so you've really got to get that done. One thing, the take profit did hit, Victor.
Nice. I did see that on the as we were doing the we were having Dr. Deanna Cole with us. I was looking, of course, at the charts on another screen, and I was seeing EU pumping up, and I was saying, you must be having a good time right now, because it was going your way.
So I got in again. So we did, when we were talking about it before, we had that kind of like expectation that it would hit that area and then come back down into that demand area to then do what it's basically doing. So the reason I got back into another position is because it did just that. It came back through, it hit this EMA here. We've got all of this gap, all of this area that needs to be filled. When I say needs to be filled, that's probably the wrong terminology, because it doesn't need to be filled. It's just there and it can get filled. But that's still a really positive position. So it's come down, it's found support, hit the demand, now break, retest, continuation. You also had the confluence of this consolidation, top of the range, retest, by the book, bread and butter.
But I mean, you haven't mentioned it, but look at that reaction on that EMA. Isn't that a beauty of a thing? If you could zoom in to that movement, that wick, look at that, guys. Everyone, this is
That, oh,
why.
you're talking about that? Yeah.
Yes. Yeah, that is. I
Because
mean, I see that all the time as well when, order blocks get reacted like this. And I say, man, this is why I trade these structures. Because, it's not a coincidence that the market reacts specifically in a certain way at that specific level. There is a reason behind it. And it's because of those structures or indicators that we use.
this whole EMA is a fresh level. We got to look at it. We got to look at EMAs as levels. Okay, it's a fresh level. It hasn't been touched. It's a naked level. And that's why I put this funny little X just to highlight that. It's an awful X. But now you see, as soon as that EMA got touched, you had an instant reaction. So that's why the take profit was there. It didn't take these highs, but that's why it's better sometimes to run the highs by having the nearest support and resistance, which was the EMA. But that's why people sleep on EMAs all the time, and they are absolutely fantastic to trade.
Yeah, they are. Yeah, they're basically they're another structure. I see them. I think in terms of structure, the market reacts to them the first time around best. And EMAs are just that, right? Dynamic support and resistance. And this is a proof of that. I see that we see that all the time. How it doesn't do the same thing every time, but these kind of behavior of price or reaction to certain EMAs or structures is so common that you can actually build a system on it.
Oh gosh! Wow! God, whoever just told me to have a look at that, you've ruined my day. Oh no! No! What a capitulation!
What asset is that?
Bitcoin.
It is. Ooh.
Look, Bitcoin in general, it's still bullish. Okay, it's still super bullish. We should expect that it's going to come down to maybe even the next level that I reckon it's going to come down to before it actually gets a nice retracement, maybe 84,226. But the most likely level it's going to come to is the retest this range, to be honest. I think we're in a lot of pain. I'm in a lot of pain. I haven't even looked at my altcoins right now. I don't want to look at them. But I think Bitcoin's got, you've got all of this space. This is a very healthy break, in my opinion. But then again, you do have... It's funny because I actually highlighted this on my Twitter, and I did like before and not a before and after. I did a comparison to what we had in 2022, and it's so funny because even with that, I just didn't do anything with my positions. I just had this bad feeling that Bitcoin was going to come down, and still didn't do anything with any of my spot positions. But the exact same thing happened here. You've got this kind of Wyckoff distribution pattern, which is like super clear on the daily from 2000. Oh gosh, God, so clunky. Maybe I'll show it on TradingView. Give me 2 seconds. I'm going to show TradingView. It's so much easier. There you go.
Yeah, this is indeed with everyone perhaps who wasn't part of the Bitcoin train, who got on at these higher prices. It must be very painful.
Not even that. Look at all of these. These are some of these positions. I'll show some of the positions that I've been in, and you will understand some of the pain. Looking at all of those positions losing. So I got into this position here, probably just a little bit further up at 3.8. So it was 3.8. This is my spot position off this candle here. Ran it a good 80% just for it to come back down into drawdown right now. The same thing with Same thing with this one as well. Ran it up, the same type of structure as all of these. Luckily, I'm deep in this from about $50. So this is totally fine. Ethereum, the same thing, back to break even right now. Sonic, which is FTM's new coin or new branding. Look at it. It's absolutely dreadful. But I digress anyway. Bitcoin, what we were looking for. So we see this distribution pattern that you can see so many times on different commodities, but also Bitcoin, it shows on Bitcoins on a regular, not on a regular basis, but all these different types of cycles, you see this distribution type of pattern. And you've got the A phase, which would be the first initial bit of resistance, the first wall. Then you would have the C, which would be like the ABC, which would be taking all of these people, all of these traders out, traders thinking it's going to go higher, taking them all out, breaking then the structure, which would be, I would say that was the structure. Breaking the structure for a retest and then continuation. Now, keep that in mind. Everything that you're looking at now, keep an eye on that picture. Let's go back now to this. That is the same type of distribution pattern that we have. We have that A phase, which is the first initial resistance area. Price keeps pushing, probably on high volume. Let's have a look. Let's put volume on here. Yeah, not much on the volume, not much on the volume, to be honest. But you see, it's not, with all of this amount of time, it's not actually going anywhere. It's not actually doing anything. Then you have that C phase, which is right here, which takes all of those traders out. I remember this exact point. Everybody thought it was going to go to 100,000. It just came back down, broke structure, retest, continue down back into an area of reaccumulation before we got this big move. So it's funny because I was looking at that and I knew that this pattern, I still did not do anything with my spot positions, which is, fool's luck. But this is the same type of thing. So I wouldn't be surprised if we start gradually just coming up and down like this, finding an area of support, maybe around that 200 EMA, and then that would be maybe then the continuation like that. And then you've got that natural, really clean trending trade that everybody is so bullish about. And that would be still really good. For Bitcoin, this is still healthy. I don't think
exactly
the end of anything, especially not Bitcoin, especially with the amount of money coming in through ETFs. I'm not going to buy Bitcoin, physical Bitcoin anymore, tangible Bitcoin, but I'm not going to go and buy Bitcoin. I'm just going to go and buy the ETF from Grayscale.
Of course.
Every single month, just putting money in that. And that's what people are starting to do. You've got loads of firms doing it. You've got people coming in. You've got ETFs for ETH. You're going to have probably an ETF for the overall crypto market as well eventually. But when it comes to altcoins, let's go on total. This is the altcoin market cap excluding Bitcoin. Let's have a look on the weekly. Again, this is, it didn't break this high. You could argue that this is still bullish. This is still the same type of structure with Bitcoin. We're coming back into, we've hit the 50 EMA. I wouldn't be surprised if we come into this golden pocket, which is the 618 and the 66 fibs. Crypto likes this area a lot. And I wouldn't be surprised if we gradually just keep bleeding until we find, we get one of that big capitulation candle into the range, and then that we start doing all of that stuff that we normally like. Until then, we're going to have to hold on to our lives with this stuff, because
But that's Bitcoin, right? It's volatile. You gotta be ready to for those swings, because that's what we know about. Even though it's becoming a more mature asset, and perhaps in the future have lesser swings compared to just about anything else, it's still a highly volatile asset, and the swings are, volatility is through the roof all the time on Bitcoin, and that's not even talking about altcoins.
Exactly. Yeah. But it is the one asset that has outperformed everything. It's
Yep.
so you pay for volatility, and
Mm-hmm.
you have to pay for these types of returns. You can't just think, okay, I'm going to buy an asset that goes up 300-400% in a year, but I'm not ready to pay the emotional stress of the drawdown that you're going to go in. I'm
Yep.
paying to play with altcoins. I know you can triple the size of your account, and it is done. I've done it and wrote it all the way back down 3 times. So I know you can really do it. You pay for the volatility, and it is a difficult market, but it's also a great market. A lot of my friends trade equities and they absolutely kill it. I don't know why I'm trading crypto when I should be trading maybe equities, but gotta love crypto. Anyway,
I think there's
digress.
a lot of opportunity there, because if you just look at from a distance, Bitcoin makes some moves that are just incredible, and with a macro movement like that, growing new asset, new kid on the block in the institutional space. I mean, why should we not look into that? Why not use that opportunity? It's you don't get there's not many times where you have a new asset class coming into existence, and that's exactly what's happening in front of us. So I think there's a lot of opportunity there, even for if you don't want to trade it, investing, or perhaps on swing trade it. If you're not into day trading, perhaps is a different things because of the spreads and the volatility, but it certainly has a lot of opportunity to offer.
Yeah, I just got taken out my second position on EU, so
Okay.
that was nasty. I could probably get back in because the trade is still in.
Hmm.
That trade is still there, but it has taken me out for $300. Interesting.
All right, so let's look at perhaps gold, since I let's look at gold since we've seen EU. Um, are you getting in? Or are you waiting for some more
Yeah,
information?
I'm waiting to see what's happening in the next couple of candles. Oh, it's still on my chart, isn't it? No, I think I'm going to leave this one. But let's have a look at. We can have a look at gold if you want to put on gold. I'll have a look at it as
Sure.
well.
I'll put on gold. Would you like to do the analysis?
Do yours first, and I'll go through it as well.
All
That's
right. All right. I'm gonna look
I
at
love this.
EU. No problem. I'm gonna look at EU, and for my day trade, I look at the H4 to begin with. It's not a complete analysis. If I were to go, we do the from the top down. There's really nothing on the monthly that's important right now. We just have one streak of selling pressure. That this is EU, of course. We haven't gotten to gold yet. On the weekly, we are breaking and looking very weak. And as long as we stay below that weekly entry order block on the bigger quasi, I think this is, just weak in every sense of every aspect. I think this is just going to continue, especially that candle. That this movement to me is the retracement it needed to do, right? So you have this impulsive move down on EU. This is, right? There we go. The impulsive move down, the retracement. You have the another impulsive move down, the retracement, and this is just continues. This is just strong downward trend, making lower highs and lower lows, and I don't see any indication of anything else. So on the higher time frames, daily and higher, this looks very, very weak. And although there is a possibility of a see the weekly order block isn't there, or it's not visible, but this is the line. I think this is the line in the sand where things could change. Not necessarily the trend, but just a pop or something, maybe a day or two of positive bullish pressure. And we are, as you can see, well below that area. And on the H4, which is where I start looking for the opportunities, there isn't anything. This is an H2, right? So there isn't anything for me to think, right, this is going to reverse or even to short this, because I want to be selling at a area of supply, right? I don't want to be selling, at the end of this move necessarily. So I, I think I'm on the sideline, and I think as long as the market is below this yellow line that which is around 0222.7, you're going to be it's going to be a seller's market, and that's where we are. So I think there's buying is very little present on the H2. Even if I go down that path, there isn't actually an outside bar on the bearish outside bar here, meaning, right, the market is creating bearish structures, outside bars, telling us the buyers are not checking in with us yet. And so to me, there is very little reason to look for a long. Of course, it depends on your style. Of course, Alex looks for that momentum play, which he got him to take profit. But based on the way I look at market, I want to have the H4 telling me the direction, and the H4 is not telling me yet to get in either direction. Let's look at the gold. We're getting near the end of this stream. Let's see. We have, of course, on the weekly time frame, the monthly. There isn't much to see there. This is just one strong impulsive move to the upside, and we had a little retracement, but there isn't any structure here that I can trade off based on the monthly. So there's no monthly trade, at least not yet. No monthly signal, that is. And the weekly time frame, we are currently in interesting area. We have a bearish order block here, which is fresh. There we go. And we also have on both sides. So basically that is, and there is also a bigger one. We talked about this a couple of days ago, but the creation of the much smaller, much more useful order block, because that bigger one is, right, it's too wide to tell us really much, right? When it gets broken, of course, it does tell us something, but it's the market has created other, other things that we can use, other structures we can use to gauge what the market wants to do, the intention of the market, right? So we have a fresh order block that was retested. That was last week. So we do have reasons to expect price to continue higher from this place, but the area to buy as on this time frame in any case was in that wick, right? When we came at that was last time. It's not relevant right now. The only other structure we have is the bearish a fresh order block we have on the weekly, and we do have a daily which is being reacted as we speak. And there is a let's see, yes, there is a quasi. It's a bearish quasi, right? That's the left shoulder, the head, and this is a possible quasi. We have to wait for this to close as a bearish engulfing to make the setup complete, the signal complete. It hasn't happened yet, but the fact that it is having difficulty right here could give us some opportunities on the lower time frames, because the fact that the wicks the last candle isn't a closed candle, right? So we can't say, how it's going to close yet. But the fact that the wicks are right there, that's not coincidence. That's the order block, the daily order block that is, exerting its effect or force on the market. At least that's how I see it. So, as shorts from here, I would be looking, if we were to check on the H4, see how the market reacts. That's the beauty. That's the same thing we saw on the 200 EMA. Look at these three candles. These are 4-hour candles where their highs are, right short of, just short of that order block. That's not a coincidence. To me, so that means that it's clear that the market is there's a supply zone there. It is being reacted and recognized by the market as such. Let's see, what else do we have? Do we have a quasi on the H4? Let's see if we do. No, we don't. At least not in this time. Not in this. Yeah, I wouldn't consider this a H4 quasi. So that means that I would want to wait for a new structure to form if I want to be shorting this area based on the daily fresh order block that we have where we are right now, right? Which is within a weekly bearish structure. Because of how bullish the gold has been in the last, couple of months, you don't want to hold this for very long. If anything, this should be an intraday trade or maybe a short swing. Short-term swing, maybe an overnight, but not keeping this too long because you don't want to be on the wrong side of the market. And let's go to the H4. What else do we have? We do have a structure here, right after the market reacted to the daily bearish structure. So I would be looking for a possible, if anything, when price comes back to this area, if it gives us on a lower time frame reasons to short. If so, then I would be glad to take a short from there. Let me check how the range for gold is for today. We are basically, the ATR tells us that the range of today's move has been already reached. There is no economical news coming out today anymore, and we have reached 100% of its ATR, meaning it's likely to stay in this area or retrace a little bit, more likely than to continue, right? Because of the mean reversion nature of the market. So that's information that we can use. If we go to the H1, there isn't really a nice. I don't see any quantities on the H4, on the H1, I mean, and neither on the H2. So I would sit on my hand on this one, maybe this one, but maybe this could be the neck. Not maybe, this is the neckline according to the rules. Is it? Let's see, that's the open 67.54, and this is 68. No, it isn't. So it's actually a bit lower, quite lower. So I would say that there's no structure broken yet. That makes it a little bit hard for me to short. We need to see some structural damage being made to the buy side, and that hasn't happened yet. Not on the relevant time frame, the H4, the H2, H1, etc. If I can find a neckline of a possible quasi, then I deem that to be a sign that a reversal is unlikely. In other words, it's likely to just hold this area or just continue higher, during either the rest of the night or maybe next day without any meaningful reversal. I mean, so I would say, I would want to see what price does when it gets back to that H4 order block, right? You can't see it there. That's the structure that could get me into a short, but the price action from this hasn't broken anything yet, at least not in my opinion, for us to look for shorts, right? To reach, for price to go much, much lower. It may, but it hasn't given us, at least not in the way I interpret price, it hasn't given us those signs yet. So we'll have to wait to see. There is actually an outside bar here. which is the second time around. So that's a reason not to trade it. But I would be interested to trade on that occasion when it reached it the first time, right? That would be a great moment to get in. That was during Asian session, which is of course outside of my personal trading window. So on the second time around, I wouldn't be trading it. But yeah, that's gold for me. So I would be thinking the short is from this order block on the H4, but not something you want to be holding for very long because the structure hasn't been broken. So that's gold. You're muted.
Somebody was mentioning about US30 and about that strategy that I use. What a brilliant, what a really nice example. Again, on the 15-minute.
I'm going to put your screen on.
So such a really, really nice example. You had this area of consolidation. That area of consolidation broke up the topless consolidation. The EMAs started basing out, started getting a little bit. You've got EMAs that, if they're like that, you got the two EMAs like that. You don't really want to be doing this. You want to be doing this when the EMAs start creating this type of base, and when they do something like that, you're looking for them price. You're looking for them price just to do what it's done here, which is slowly come up, break up above the EMAs, retest continuation, which is literally what you've seen with this. And then the 200 EMA is just that next point in the road as dynamic support and resistance. But that's a really nice trade. How you would have seen it on the 5-minute, there you go. You've seen the exact same kind of structure. If you're on the 5-minute, you probably wouldn't have got that, because the trade that I would have been looking for would be 200 EMA. So it would have actually been this area that I would have probably have gone for. So you see this area of consolidation. You have that break above the EMAs. So this area right here. And then you have the retest, which is into a prior area pre-break of demand, hitting a 50 fib. Oh, that is beautiful, man. Have you ever seen anything so beautiful in your life, Victor? Just absolutely stunning. You just can't make it up how technically sound that is. It is just absolutely trade delicious,
It is.
So yeah, that was a really good example. Whoever asked that was the trade. Wow, beautiful trade. Wait, so Ahmed, did you get into that area or did you get this trade off here? Because you've got a really nice double bottom as well, right there, which is beautiful trade.
It is. It's a very beautiful one. And it looks so easy, right? When you see it this way, when price action is so clean, so technical, it makes it easy to be a trader. Although the reality, it's not. The thing is, it doesn't do this all the time.
Honestly, you'd be surprised how easy it is. This particular setup is super easy. Do you know what the hard thing is?
What is?
Not being an idiot when you're not in this trade, okay? That's the hard thing. And not wasting, getting into mediocre trades in between that to then lose all the money that you have made. This would be my bread and butter setup. I do have other setups. And then I've got the boredom setups. And everybody has their own boredom setup. And those boredom setups are the ultimate thing that the difficult part of trading is about keeping yourself when you're not supposed to.
Yes, actually, Rich, our good friend Rich, knowledgeable Rich, said not very long ago that it's the trade we take in between the good trades that kill us or break us, that makes the difference. The trades we take in between the good ones.
Exactly.
Yep. All right, and on that note, we have reached the end of our stream.
Woo!
I
Oh,
would
brilliant.
like to thank I would like to thank everyone for tuning in for another day with us. As always, we are focused on your growth as a trader. So if you like what we are bringing to you, hit the like button because that makes us able to keep on bringing guests like Dr. Diana Cole for your delight, right? You can learn, we can all learn a lot from all these good guests who have, knowledge, expertise in different fields. The only thing you have to do is hit the like button, subscribe to our channel, and make us able to keep on doing this for you. So, and for everyone who is a member of our Discord group, yes, we have a Discord group, which is also that's what we do. The Fifers is by traders for traders, right? So we are focused on creating that community, that group of people who are going to help you become better traders. So we are having set streams right now. Actually, in about 40 minutes, I will be hosting another stream on Discord, which is a little bit different, but I enjoy them a lot. So I'll invite all of you, if you are part of our Discord community, join us in about 40 minutes, actually 38 or so. And if you're not, you're missing out. Buy your account, get your access, and join us on the other side. That's it. So, any last remarks, Alex?
Have I got any last remarks? Try to keep the profits that you've made. That is my best remark.
All right. On that note, see you guys all tomorrow. Bye bye.
Hi guys, so thank you very much for watching the video. Now make sure you like and subscribe, and most of all, go into the YouTube and check our other content that we provide here at the Fivers. We'll see you in the next one.